Well, it appears that the markets are having a corona coronary of sorts, as even though the virus seems to be slowing in terms of its spread in China, but it's rearing its head in other countries fresh. And late Monday, Apple said it won't meet its revenue guidance for the March quarter due to lower demand caused by the outbreak of the virus in China. Much of Apple's supply chain and consumer market are in China. China's factories are running at around half their capacity as a consequence of this virus. The announcement pushed many stocks in the tech sector lower, and in consequence, most all markets fell at that point. The German ZEW, which is the first post-coronavirus indicator of sentiment in the Eurozone's largest economy, came in well under expectations at 8.7 versus 21.5 forecast. But nevertheless, the jobs market over in the UK is booming with the unemployment rate at 3.8%, and that's the lowest level since 1975, while employers reported vacancies at 810,000, which is the highest since the 3 months to September. Productivity growth in the UK, however, does remain an issue. And that said, the strength in the pound and in the UK markets in general have so far done a good job of at least postponing Brexit-related uncertainties as markets are forward-looking. Brexit can ultimately be a win for the UK economy, even though the transition may be a bit rough. Should the coronavirus take longer to contain than anticipated, the damage done to the already fragile global economy will naturally be greater. In answer to this, on Monday, the People's Bank of China cut the interest rate on its medium-term loans. This boosted various markets, which always welcome new measures of stimulus. In a way, the coronavirus spurs a Goldilocks scenario of sorts. For instance, if the virus takes longer to control, central banks will increase QE. And if the virus becomes manageable in brief fashion, then of course that is a bullish event for stocks. One ray of light concerning the virus, and if this ray of light is to be believed, is official Chinese data continue to show a slowdown in the incidence of new infections and deaths. Contrary to this data, London Capital Group analyst Jasper Lawler said, quote, "The number of new coronavirus cases has gone up in China, but new stimulus measures from the Chinese central bank is putting investors at ease. The PBOC has cut medium-term rates in order to minimize the likely strain on the economy from the coronavirus. This will benefit around $29 billion in Chinese loans." This tells us a cut in the loan prime rate is coming on Thursday too, unquote. So with central banks at the ready, any exogenous issues can be answered by their unending reliance on quantitative easing. Markets therefore have experienced nearly no material corrections even in the face of a crisis such as the coronavirus, which is so far more virulent and damaging than prior viral cases such as SARS or other coronaviruses that litter our past. Gold hit a new high, 7-year high, as a consequence of all this, and Bitcoin appears to have found a floor under 10,000. It's most likely going to take another run at 10,000, and indeed QE in any crisis situation are big tailwinds for both of these vehicles. Meanwhile, the US dollar hit 3-year highs on word that the Federal Reserve may keep rates at current levels for at least the next 6 months as economic conditions in the US may warrant it. Now, we've had questions concerning cryptocurrency ETNs, namely the grayscale ETNs. Those are the most liquid. You have GBTC, which approximates the price of Bitcoin, ETHE, which approximates Ethereum, and ETCG, which approximates Ethereum Classic. You also have GDLCF, which approximates the price of a basket of, I believe it's 4 main cryptocurrencies. That's Bitcoin, Ethereum, Ripple, actually 5, Bitcoin Cash, and Litecoin. Now, all these cryptos correlate to a high degree to the direction of Bitcoin. But if history is any guide, when Bitcoin has been trending higher for several months or longer, Ethereum then reawakens and outperforms Bitcoin. So given that we are now seeing Ethereum outperform Bitcoin for the longest duration and magnitude since late 2017, It's possible that this outperformance will continue, especially given that the Bitcoin bull is still alive and well, and most likely has a ways to go given all the tailwinds in play. So if you want more potential upside than GBTC, you might look at ETHE or ETCG. They have, in the last few weeks, outrun price performance in GBTC. And I'll provide some charts in the next report that illustrate this. But overall, when going back to when Bitcoin bottomed in December 2018, Ethereum and Ethereum Classic have played catch-up to Bitcoin. For the great-scale ETNs, this is easily observed between the charts of ETCG and GBTC. That's both which have been trading during this whole run since December 2018. And ETCG, if you look at the lows to where it's trading today, it's had about a 3.8-fold gain. And that's pretty close to GBTC, which is about a 3.2-fold gain. But off recent lows, ETHE is the clear winner with a near 5-fold gain. So while both the ETCG and ETHE have recently well outperformed GBTC, when GBTC, that is Bitcoin tracker, is correcting, then the price of ETHE and ETCG suffer much deeper corrections. And the same can be said for all the other coins that are part of the grayscale ETNs. So you better position size accordingly if you're going to take a shot at those higher volatility, higher risk, but higher reward ETNs. How are you seeing things, Gil?
Well, it's obvious that, market's coming off today, and I'm short the market here and have been for at least the last couple of days, although there is a lot of things you can play on the long side, so I don't really get, rigid one way or the other. Obviously, Virgin Galactic is a great call we made last week as it came out of here on a pocket pivot breakout, and it's a double in how many days is that, Dr. K? 7 days. 7 days to double. So,
not bad.
All you need is like a couple of those and your year is pretty much done. The other one would have been Tesla. So this one is, what is amazing about Tesla is we talked about this last week, how it was holding in a tight flag formation. It's not really a high tight flag on the weekly chart because it never stopped on a weekly basis. It continuously made new highs. So, this is actually setting up here and hanging very tight just below the $900 level. So it looks like it wants to go higher, but the market's coming off. That's one of the things I hate about certain stocks, that they will tend to, you get these situations like Virgin Galactic, even Tesla moving higher lately. It's like you don't really want to get long it here now because it's already had a big move, and the market's starting to come off, and we could come off a ways, But we'll see. We'll see how this plays out. In any case, things I'm looking at here, here's one of my shorts, and this stock has been moving higher over the past month, well, not since the beginning of the month, on the idea that with all these Chinese quarantine, they're all going to sit at home and play video games, and these guys have an online mobile gaming platform. So they shoot up, and I'm not really sure why, but coming in here yesterday, it looked shortable along the 28 level. This morning, again, it was again. Let me get my syntax straight there. And it's coming in. I think this could come down to at least 24, so I'm still shorted. I do play it like yesterday. It came down to the 10-day line. The market turned, covered it. It opened up at 28 this morning. I was actually hitting it in pre-open right at 28. I don't know who was standing there buying it, but they're down now, and I'm up, so we'll see what happens. But I came back into it on the 620 chart. I covered it again down at the 10-day line, and it bounced. And let me see if I can find my 620 chart here. And you just rally back into the 20-period line. So I just put it back out about 5 minutes ago. And it's coming off a little bit. I'm not going to get all excited here. But there's a whole bunch of things you can come after here. All of these semiconductors are breaking. This one of my favorites is short because it's been shortable every time it's at the highs. And every time you break out to a marginal high, new high, look at that, and you break lower. So now it's turning into a confirmed late-stage failed base. Bingo. but that's what you're seeing with a lot of these semis. MU is starting to fail at the 20-day line. Let me just run through the line, through the list of names I watch. Microchip is breaking below the 20-day line. KLIC was a short at the 20-day line yesterday. And I'm looking at, right now I'm actually watching, let's try a little test here. DBX, Dropbox, they came in with another loss. They lost 19 cents. But you had a MACD cross here. You're right near the highs where you've run into resistance. If it pushes above 28, I'll just cover. I just put out a tiny position, 2,500 shares. So we'll see where this goes from here. But that's one potential opportunity. They opened it up this morning, had a quick streak right at the open, up near like 23. What was the high there? 23.73. And you opened up near 22. So boom. It runs up and then it runs back down, and here it's coming about midway right now up to the 28 level. So I'll put out a little bit here. The 620 is showing me a little bit of crossing action. You're near the high, so I figure if it can get through resistance here, then of course you just cover it, and it may do it. If it doesn't break down, it may do it while we're conducting this webinar. In any case, what's your favorite short, Dr. K? Do you have any? Bitcoin? No.
Yeah, I mean, I think that what's interesting is ETHE sometimes really overshoots, and then what you'll see is even if Ethereum has an up day, ETHE won't have an up day. In fact, it might be flat or even down because it's just gotten ahead of itself. So if listeners want to track the price of Ethereum to ETHE, it could be a nice quick trade on the short side, because basically you're pretty insulated. So even against a rise in Ethereum, if you get a rise in Ethereum but ETHE is overextended, you could put out a short on that and maybe score a few points, because this thing's very volatile as well. So getting a 3% gain, 5% gain off ETHE in that situation is certainly a possibility.
Okay. Anyways, well, we know gold is doing well. It's actually pushed to a 7-year high, just shy of a 7-year high. I think right now it's like at its highest level since March of 2013. So we'll see how this plays out. I love the move in Dropbox. So when you think about it, it's up 22%. Kind of reminds me of Domino's. I was trying to figure out what's so great about Domino's, but you had a viable gap up, and it's held the low. And then Dropbox, they reported another loss, I think 19 cents, and there's no real short interest in this thing. But that's the move. So it's basically taking you up into this area of overhead congestion. So, I mean, if I get stopped out on this tester position, then I may come back to it later, but that's fine. I don't have a problem with that. Everything else is working pretty well on the short side. Still have a long position in UVXY from last week, which I bought down around 1060. So that's doing pretty well, but I don't have to own a lot of that for it to work pretty well for me. It's up 8.8% this morning. We'll see how this plays out. It seemed like yesterday's action, they busted everything right at the open, and you came down pretty hard, and then you stopped. I think that didn't the Dow come off like 380? I didn't really pay a lot of attention to it, and then it bounced, and it worked its way all the way up. It was very interesting. I saw someone writing about how all the stocks, like all the big stock NASDAQ names, they all broke hard in the morning, and then they all slowly rallied right back to their VWAP, which is a value weighted average price for the day, which is it's fascinating. So I keep saying 28 level. I mean 23 level on this one. So it's just starting to push me here. We'll see what happens. But, like I said, no real skin on this one yet. Coupa's a nice short, someone's saying. Yeah, that you can see how it does the double top thing, and that's usually what I look for when it comes to short sale targets around in this market, because you'll tend to get sharp breaks off the peak, and then they come down into, maybe in this case off the 50-day line, you're bouncing slightly. So yeah, they're still pushing the Dropbox. It's right at 23. I'm just going to kick it out. So I don't let things get too far out of control because they could continue to push it. Maybe I should go long the thing at this point. Any other questions on stocks? What else is going on here? Let's see. I mean, let's look around for a little bit here. Check my list. You got on earnings, you've got a lot of breakdowns. So you have First Solar getting crushed. You have OLED or Universal Display getting crushed. Zscaler is getting crushed. Boy, look at that. That's nasty. Appian, APPN. This is one I never understood why it was around. I guess I had a heavy short interest, and look at that thing. It just blew apart. So, you know, you got to be careful what you own into earnings or what you hold on to into earnings. I know Agnico Eagle Mines blew apart. That was one we had on our report watch list. But you notice the stock never went anywhere. And ahead of earnings, it was living below the 50-day line. So I wouldn't have held it into earnings at all. So I would have been out of that thing and not holding, because you obviously, if you bought anywhere in here, and we reported on it somewhere in here, maybe even earlier than that, it never went anywhere. So it was telling you already it was weak. So there was no reason to be in it. And then you rally back up to this shortable gap down, and you rally back up to the high today, and you roll over. And this is occurring in the midst of precious metals doing very well. So, you know, what's wrong with this picture? Well, it's pretty obvious what's wrong with this picture. The one that's doing pretty well, Franco-Nevada, Pure Play on gold, and also Pan American Silver, which we put a report out on. When was that, Dr. K? Like Tuesday?
Something like that, yeah.
Yeah, and
I
so,
think that's right.
you know, bada bing, bada boom, it's gone higher. You know, they reported earnings last night after the close, I believe. And they had a good report, so this one's moving higher. But I think, you know, you can also just own SLV, which is, it's kind of up there. So
Yeah, the question is when is silver going to catch up with gold, because the ratio is still pretty out of whack.
yeah, I'm looking at this right now. I'm thinking about buying some in here. There goes DBX. I reshorted it at 23. I'll do that. Like if I set 23 as my stop, then I'll cover it. If it goes above, it goes back below, I'll enter it again. I can do that 3 or 4 times. So you have to have a lot of buying power, intraday buying power. So thanks for silver, gold, TLT, and GBTC. Love these things I can buy and hold on to for a while. It sure seems that way, Ernest. And the silver, you know, and the gold, to me, I've been holding gold since year 2000. So, and I bought it under 300. So I'm an experienced precious metals trader. The only problem is I haven't really traded them. So, and then as you guys all know, I told you when I was taking a huge position in the SLV, or a huge core position down underneath, when the SLV was trading underneath 1670 or 1570, somewhere down there. Let me take a look at this. When it was down, this was way back here. Yeah, when you had this undercut and rally move down in here, I was just coming into it here and along the 20-day line. I got very heavy in this area, so I got this. Then we come in, and what I do up here, when you run up, I sell away the non-core position and then look to rebuild it. But the thing is, you have to be patient and persistent, because sometimes it just won't take off again. It sets up and it just keeps making lower lows and wants to scare you out. And I think in a lot of cases that turns out to be the case. People get scared out of them. But that's really the time when you want to be buying. So looking around, okay, how's Domino's doing? Not that I want to buy it. I was wondering if it's a short. I really don't understand this one. Okay, let's take a look at wonderful market smith. So you got DPZ, Domino's. They came in with 19% earnings growth on 6% sales growth. They're going to grow earnings 13% this year and 14% next year. And right now they're trading at a trailing 12 PE of 39. So you can figure the actually forward PE is maybe closer to 30, 32, something like that. Can you calc that for me real fast, Dr. K?
1 second, I was just looking at something else that came across
What's
my
the
ticker.
current price?
What do you want to know?
1231.
Sorry, what's that?
The current 368.20 divided by 12.31.
It's about 30. Just about 30 on the nose.
Yeah, so you're paying 30 times for a 13 or 14% grower, yet it gaps up like this. And the only thing I can think here is that you have 4.7 days of short interest. It's really not, that's about 5 million shares against a float of 39.3 million. So I'm trying to figure out what's going on here, okay? Anyways, let's see. Billy's coming in a little bit. That's one of my active shorts. A lot of these, Zoom is another. Okay, here's my thinking. Zoom was another one I finally came after up here. It's starting to flounder along the $100 price level. Now I don't know why. If you look at this on a weekly chart, you see the move here. That's a classic pot, or punch bowl rather. So you've got a punch bowl going on here, and oh, they're going to mess with me on the DBX around 23. Look at that. Now we're 23.06. Who's buying it? Are you guys out there buying it? No, you're supposed to short it. Anyways, there we go. That's it. Coming down at 22.99. Okay, Billy is coming in. But this one also shot higher on the premise that because all these Chinese are quarantined and nobody wants to go to China, we're all going to do video conferencing with the Chinese. I don't know. I haven't done any video conferencing with anybody anywhere. I don't even like to do video conferencing. When I go on Benzinga, the Benzinga.com radio show, they all have cameras on them, and it's at 5:30 in the morning my time. They want me to have a camera. Forget it. I'm not really into it. I'm not all that attractive at 5:30 in the morning, probably because I just come back from a run and I'm all sweaty. Anyways, but Zoom, to me, this becomes shortable up here. We've talked about this. I thought it could have been shortable here, but you notice how it held the 10-day line. So there's no way you can short it if it holds the 10-day line. But notice now you have a punch bowl formation, and you're starting to fail around the high. So what becomes your reference? Well, you've got two references for a hard failure. And the first would, of course, be, what happened here? There we go. There we go. Dropbox now 22.86. All right, you guys, that's it. Everybody's shorting it, right? Hit it. Hit it. Coming in. Here we go. Silver's backing up a little bit. It usually will move overnight is when it tends to move the most. Anyway, so your reference here is 100 because that's the century mark. So you use Livermore's century mark rule in reverse. Now it broke below it earlier today and then held, so it may take a little bit of time. Now, barring that, the next thing you look for is a breach of the 10-day line, okay, and that would definitely trigger it at that point. Then you use the 10-day line as a selling guide. The only problem is in this market, you have to be careful because a lot of times moving averages don't mean squat. They don't necessarily work as resistance and support in a lot of cases, and there's a lot of places where you'll get fooled, or you're using several moving averages. So, for example, you can see here, this looks like it's holding the 10-day, but it's not. It just dips below it, and here it looks like it's holding the 10-day, but it's not, but it does find support at the 50-day. So you really got to dance with these things, and you'll hopefully catch them at the right spot. So I think this one is a punch bowl of death. Or it is a punch bowl, I'll tell you that much. Correct? It's deep enough, just about deep enough. About 40, 45%, that's what I want to see. And in other words, it has to be a fair amount deeper than what would be considered a deep cup, which is 35% deep. So that's really the criteria for it. And so you have this rapid move up straight up the right side. I don't necessarily see this as being able to hold here. So, you could possibly, let's take a look at this on the 620. You see how you get the break early in the day. This is classic action, and that's why I cover about half my shorts right off the bat if they start working. And you get the break right off the beginning of the day, and then they slowly march back to the upside. So here it comes, and you got the MACD cross. So if you had shorted it early, you'd be covering there on the MACD cross. Now we're watching it push higher. And we'll just have to see where this goes from here. So anyways, any other questions on individual stocks? No. All right. Here's another one. Wix, another one that blew up after earnings. That was a shortable gap down. It actually opened down here. It rallied up to the 10-day line. At that point, you can start stalking it on the 620 chart. And then, boom, the thing blows up. And Now it's hanging along this low, but it hasn't undercut and rallied through it yet. So we're kind of watching this for a rally into the 20-day, which might bring it into play as a short. So looking at some of these other things like Visa is hanging up in there. So just running through some of my lists here. Look at Electronic Arts is failing at the 20-day line. So you notice here you're starting to see something of a, whoops, I need my pen there. Here you go. A fractal head and shoulders. So that may start to roll over and then head for these lows. So in here, that becomes a short here using the 20-day line as your selling guide. Okay, Dropbox starting to come in. So I doubled the position here, and we'll see what happens. I think I'll probably give it a 1%. So that would take you up to 20, around 22, 23.20. It looks like it's weakening, but I could be wrong. Let me see. Yes and no. I could always take a dime profit, I suppose, but okay, where are we? Where were we? Here it comes. Now it's coming in hard. There we go. That's what I like to see. Nope, getting support again. Somebody likes this thing. Why, Dr. K, why would anybody buy this? Does anybody use Dropbox? I mean, I can use Google Cloud. I can use AirDrop. I can use all kinds of stuff to transfer files over to other people. There isn't huge short interest in this. So what's your take?
There's a lot of competition, and it's it's had a pronounced downtrend, and it's this is possibly a one-day wonder here. Gap higher, but shortable.
Right.
I'm not convinced that the company's turning around and now where it's off to the races. It's got a lot of also technical overhead that it's got to wend its way through. So
yeah, well, I'm up 20 cents now. So 2 dimes. I shouldn't say anything now. I'll end up jinxing it. But it comes in and somebody, I got to think they're going to unload this thing later on in the day, but we'll see. I mean, I'm still using 23.20. Now I can lower that. I'm just going to use a hard 23 now on that if it does push against me. But it still might be tricky. And Billy is coming in now. So I've played this now
the other thing also with Dropbox is that if you look at the revenues over the last 8 quarters, pretty much every quarter is less than the quarter before. So you could say revenues are slowing, which is not what you really want to see for this type of company. And earnings themselves, they're pretty erratic, but the revenues seem to be surprisingly, I would never expect that for this kind of cloud company. So that's kind of a red flag.
Okay. Well, I'm short it now. I'm short and up 15 cents, 10 cents, I don't know, whatever it is. Well, we'll see. I mean, 1 or 2%, that's not what I'm playing for. I want this turkey to break. Anyways, and I think you have to be opportunistic when it comes to the short side. It doesn't have to work today. I mean, I've been watching Billy, for example. I've been playing this. Again, these guys lose money. They're going to keep losing money. But once I saw this break here, I figured any rally up here to 28 or a little better might be shortable, and that works. That's been working over the last 4 days, and I've been playing it that way. But I come back to it, I'll cover it when it breaks to 27 and then come back to it, and it rallies. And eventually, though, it's going to bust. Now it's below the 10-day line. So I'm back into it for the second time today so we can see how it's working, because I hit it right at 28 at the open, and same thing I did yesterday, and it broke. And then, of course, that happens in the first 20 minutes, actually. So I actually take the quick profit and then let it bounce around. It rallies once it hits the 20-period line, and it's coinciding with this peak here on the intraday. I'll come and hit it again. So you really have to play these stocks like this because the intraday volatility is crazy. So often you see things just fly all over the freaking place. Anyways, still no questions, huh? What time is it? 8:30. I'm done. That's it. Look at, here's Intel. Yeah, I think they're going to, well, now we're starting to rally. The market's rallying, but my short positions are not. Is that meaningful? I don't know. Anyways, just looking around. Let's look at some of the things on our watch list. So if we come over here to the HES Investor software, we go to the reports, and we can see Ultra Clean. This one's been, this one tried to break out yesterday and just in brutal fashion just failed and has reversed. And it's now morphing into a late stage failed base. So you can see it dropping below the 20-day line, but trying to find support at the 50-day line. So that could turn out to be rewarding one way or another, depending on how it plays out from here. So, but the only problem with this in my book is 481,000 shares a day on average. So anyways, Infi is another one of these. It looked good. Tried to break out here. Now you got to watch this one because it could bust the 20-day line and become a short. So Lulu is coming in. Shopify, this is starting to fail on the viable gap up. I was afraid it might do that because it's pretty extended at this point. And you're starting to see how the earnings growth in the last couple of quarters is why the stock was moving when it had no earnings. So that's all starting to come to fruition, and we'll just have to see how that all plays out. Let's see. Chewy and Nvidia were my two of the shorts this morning, someone says. Let's take a look at them real quick. Chewy, yeah, see that's what I'm hoping to get out of Dropbox, okay? And Chewy, yeah, that's Nvidia, I guess that would have been yesterday, would have been the shortable gap down, but you're breaking the 20-day line now, so that might be trouble. I guess we'll see how this plays out. Seems like a lot of strength recently in smaller caps. Maybe a shift is afoot. I don't think so. I wouldn't like start buying small caps just because you think there's a shift to small caps. I doubt if that plays out that way. If the market comes in, this may be financials hanging in there. I don't know. Why would you think that Russell is holding up relatively well, Dr. K?
Well, the NASDAQ composite is well outperforming the Russell. So I don't think there's any evidence that small caps are now, going to outpace, the bigger companies. I don't see the evidence at all. I mean, the NASDAQ hit new highs a few weeks ago, and the Russell was still below highs. And I mean, it's still below highs. So, if you have a risk off, or if you have risk on environment, then that can favor small caps in traditional markets. But this is a QE-driven market, so I think that the big caps, the mid to big caps, tend to benefit more than the small caps that we've seen. And a lot of the fund managers have to stick with the FANG stocks and basically the bigger names with all this extra capital flowing around. So yeah, I would, and also with the smaller caps, you run more risk. There's more volatility. Yet the upside is arguably not any better than what you're going to get with a bigger name. So I think the bigger names in this QE environment give you all the benefits.
Yeah, we could see that those like Apple is kind of rolling through the 20-day line here, so that could be trouble. Amazon, I'm just going to run through some of these. Amazon coming back down. It looks like maybe a test of the 20-day line here. What else? I should know all these. I mean, they're all coming in a little bit, which either argues that, they're holding up okay, or they're going to bust pretty soon. And these are the best stocks. They're all the alt currency type names. In other words, they substitute as currencies when you have all this money sloshing around out there. So I just covered Billy right here at 2708, and I'll show you why. But, I'm dancing with this at this point. It's kind of, that's not it. It's got this little pickup in volume, so I'm looking for another move up to 2722. I might pick it up, or maybe it just breaks, but I don't care. I played it twice, and done pretty well with it so far. So what else? Seems, oh no, Corvo playing with 100 level may be worth watching. It was already a short up here on the breakout. So, I don't know if it's worth watching, but because you're not, just because it's 100, at this point, this is not a century mark reversal, okay? And the reason is because it was sitting above there for a long time, and it's not like it tried to clear it and then broke back below it. So, it did this. It's just dropping through it. So I wouldn't consider that a century mark reversal. Where you had to come into it was right here and up around the 50 line. What happened to my pen over here? Jeez Louise. Okay, here we go. Up here, when it rallies up in here into the 50-day line, that's where you would hit it short. You don't hit it short here on some idea that it is a century mark reversal. So, because it's not. So the one that would be a century mark reversal would be, if you look at HubSpot, and this one, dynamic requesting. How about just slow requesting? Now this one rallied right up to 200. That's the first time it's ever gotten there. So you can see here, I'm sorry, it's the second time. The first time it failed. So it was actually a short the first time it did that. Took it about a week. And now it's doing it again. So you're right in here, but you're also right on top of the structure. So you could bounce back up, but it was a short yesterday at the $200 level. Okay. So that was really the spot to come after it. Oops. Fiverr. I noticed this one is up there. That had a big move. Whereas Fastly, these are recent IPOs. It broke down. Nothing but net. Cloudflare, nice big breakout. But Ping, which is one we talked about before, tried to break out, and it's failing badly. So I get these emails from IBD, and this was leading IPO breaking out with customers from who consist of Microsoft, Google, blah blah blah. But it's a shortable breakout. So look at this. Billy is not rallying. Look at that. I covered it at 27.08. So it's 27.03 bid. So it's probably going to do, Gilmore's law of shorting is that wherever you cover a stock, it will go a little bit lower just to piss you off. It's just the corollary to the long side, where wherever you sell a stock, it will go a little bit higher just to piss you off. So the market knows who you are. So I just want you to know that, that the idea that it doesn't know or care who you are, it doesn't seem like that's the case these days. It seems to know who you are, and it cares very much who you are and what you're doing. So it can fade your sorry, but anyways, let's see. Any other questions? It's I want some really good questions. There's really nothing out there, is there? Because it's sort of it's a little bit of a seat of the pants type of market, and I have to admit that I sort of approach it that way as well. So I'm long, long space, long Virgin, playing Tesla, playing clouds on the way up, and then you shift, and then you go to the short side after being on the long side. But Tesla still looks like it wants to go higher, and I don't know. Anyways, are you still interested in some of this stuff like Cron? I'm not really interested in it, so I'm only interested in things that want to go higher. And somehow I don't think that in this market, something like this is going to go higher. You need to have a nice strong bull move, I think, to see some of these things go higher. They're trying to set up, but they really can't get going here. So, I'm not necessarily a big fan right here. Anyways, and I'm not going to plan. Maybe if we suddenly saw the market rally like mad, then maybe I'd come after them. So, let's see. I sold not quite half of my UVXY earlier, but now it's undercutting this low. It looks like maybe we'll come out. It really depends on what the market does, obviously. Here comes DBX coming down. I think this thing could go all the way negative by the close. Am I just hoping too much? What do they say? You hope when you should fear, and you fear when you should hope. So I don't know. Whatever. Stop me out at 23.20. I dare you. Anyways, what else?
It's interesting.
Go ahead.
This ETHE, I as everyone can see, when it got hit, when it was listed, I mean, it got pummeled and way oversold relative to where Ethereum was, what it did. And now, if you look in the last few weeks, the price of Ethereum has a little bit more than doubled. But if you look at ETHE, it's gone up fivefold. So I think it's becoming more and more ripe for the short side if you can get the borrow on this. I mean, today it's up over 10%. Ethereum itself is up only about 2%. So there's a lot of froth in this ETHE, and